In our previous discussion, we discussed that revenue can be recognized in a moment in time and over the period in time as well. So the previous section was more related to revenue recognition at a given moment in time, meaning the transfer of the product or rendering of the services is done at the given period of time. However, in a certain situations, the revenue cannot be recognized at a given moment in time. In fact, the revenue recognition is done over the period in time. For example, in case of construction contracts, the performance obligation is completed over a given period in time. It can be 1 year, 2 years, 3 years, or any period in time. So we have to recognize the revenue, related costs, and the profits also over the period in time. Now in that case, there are two main methods are there with reference to progress towards complete satisfaction. One method we can use input method and the other one is called output method. Remember which method we will use, that will be asked by the examiner. But if you're able to understand one method, another one is exactly similar to that. So what about the input method? In this case, we are going to recognize revenue and we will do the allocation of the profit based upon the input. What is the meaning of input? So input can be with reference to cost incurred. So a construction company who is constructing a building, they are basically incurring the cost. So how much cost is incurred up to a certain period of time, we can do the allocation based upon that. Remember, the whole discussion is done from the entity point of view who is supposed to do the revenue recognition. So under input method, that is done based upon costs, the labor hours, like how much, the time period they have spent on the labor hours, that can be done related to that. For example, there is a consultancy company who is charging based upon number of hours they are providing the services. Number 3, it can be done based upon resources consumed. So there is an IT company who is providing, for example, IT infrastructure services. So how much resources they are providing, that period of time can be used as well. How much time used, how much time elapsed, how much time utilization is done, or it can be done based upon machine hours as well. So if a machine is running for a certain machine hours, we can do the allocation based upon that. So this is the formula we will use. So progress will be equals to cost incurred to date divided by total expected cost. So the practical application of this formula, even this formula, we will do one example in a moment. In fact, this is a question and you will be able to understand. So, but for the time being, this is what we are going to use. Output method, this can be based upon appraisal of results achieved. Now, same example for construction contract, this time we are saying, no, not based upon the cost, but that will be based upon how much work done or how much work completed. For example, in a 10-story building, let's assume 3 stories or 3 floors are completed. So after the appraisal is done from the consultants and whatever the authorities are there, then we will say that appraisal of results achieved, like how much work done. This can be done based upon milestones achieved or milestones reached. So for example, in a software development, whenever certain modules are completed, like for example, receivable portion is done, payable is done, and so on and so forth, certain milestones done, we will do the payment, the customer will do the payment and we will do the revenue recognition. How many number of units produced and definitely how many number of units delivered, we can use any one of them. This is the formula used. Remember one thing, that as soon as an estimated loss on any project becomes apparent, it must be recognized in full regardless of the methods used. So for example, in a construction contract, let's say the contract price is $100,000, like the total contract is $100,000, which is supposed to be completed in 3 years. For example, this is the construction of a building or tower, for example. Now let's say after 2 years, the cost which we already incurred plus the expected cost, if you add all of that together after 2 years, when some of the construction is done, that is supposed to be 150,000. Now you see the cost incurred on the cost on the contract is supposed to be 150, while the contract price was $100,000. So that means there will be a loss of $50,000. This $50,000 amount, this is an estimated amount. You must, like the company, the construction company must recognize this $50,000 as being a loss. So you will not do this the methods to the allocation of the loss. No loss, there is no need to do any kind of, in case of loss, there is no concept of loss recognition over the period of time or loss recognition in a moment in time. No, that will always be revenue recognition over the time period or over in a moment in time. So whenever the loss is there, you have to recognize full loss immediately. Let's do the question. So there is a construction company has consistently used the input method. Remember, they told you that we will use the input method. And remember, the input method can be based upon the cost, resources, or time, and all that. So input method used based on the costs incurred. So they told you that the basis we are going to use is cost incurred to measure the progress towards the completion. Why progress? Because it's going to complete over the period of time. On 10th of January, year 3, the company began work on a $3 million construction contract. So the total contract price, this is basically the contract price, total contract price is $3 million on the date 10th of January 2003. So here I'm going to write it down. This is not in fact 10th of January, this is in fact the 1st of January. I don't know why they are using 10th of January. So here simply I will use 1st of January 03, and the year end is going to complete 31st of December year 3, right? Total contract price is 3 million. At the inception date or at the start date, the estimated cost of construction was $2,200,000.